Hello, I'm John Curiel with this week's edition of Polar Politics. With me today are Rob Roll, the Communications Director of the College Republicans, and Robert Fernandez, the Secretary of the College Democrats. Thank you both for coming today. Today we'll discuss the Bush tax cuts set to expire this year. The tax cuts established in 2001 and 2003 lowered the income tax bracket rates along with the capital gains tax. The question is, should the Bush tax cuts be extended or allowed to expire? Let's get right to it. Rob, we'll start with you.
Well, thank you for having me here today. I think one important thing you need to note as well is that these were supposed to expire in 2010, but the Republican Congress, along with the President, agreed to extend them 2 years. That's why we're facing a 2013 expiration now. I believe that we need fundamental tax reform, income tax reform. The average American should be able to fill out a tax return without consulting an accountant. We need to get rid of a bunch of loopholes and lower the rates so it's revenue neutral. But given that next time Congress meets, they're all going to be lame ducks in a limited time, there's really not time to do that. So in lieu of fundamental tax reform, I think we should extend all the Bush tax cuts until we can get that done.
Okay, and then Robert, what about you?
Well, I'm actually going to agree with Rob here on extending the Bush tax cuts. I think currently with the way the economy is going, with the way unemployment's failing to lower, I think what we need to do is we need to extend them because that's just basic economics. You don't raise taxes when you want to create more jobs. That's just basic Keynesian economics. I think what we should do is we should wait till we're back up to full employment, and then we should, again, reform the tax code. We should certainly raise the top marginal tax rate, put it back to what it was in the 90s or maybe even earlier during the 50s or 60s, along with taking just kind of a holistic approach to our tax code. And fixing some of the problems that we saw with the Bush tax cuts, like ballooning income inequality. So I think we both agree that the tax code needs a lot of work, but I think where we disagree mostly is where that work needs to be done.
Well, I'm glad to see we have some agreement. I mean, who says you can't have bipartisan agreement nowadays? That's a common complaint I hear. I'm glad that we can agree that for the next the lame duck session of Congress should come back and extend all the tax cuts. I'm glad we agree on that. Especially glad that we agree in extending the capital gain tax rates, because that's the tax rate on investment, a tax rate on people who take risks. So I'm pleased to hear your answer. I'm glad we can come to an agreement here.
Well, yeah, that's just basic economic sense. You don't raise taxes when you're trying to create jobs.
Yes, well, I'm glad we found some agreement. So then let's try to find some area of disagreement, if you don't mind.
Of course.
So then, the Bush tax cuts, though, did a number of things, such as most controversial, lower some of the top income tax brackets, capital gains. So then, you mentioned you wanted to establish a more permanent tax code. That's reformed and everything. So then, is there anything from the Bush tax cuts you'd like to see more permanently implemented? Not necessarily the whole thing, but...
Well, I just see the rates lowered. You know, my ideal plan, I don't know whether it's feasible or not, is to have a flat tax. The same percentage tax on every single dollar of income, with an exemption for the working poor. So your first, say, $5,000, $6,000, however much money you earn is tax-free. Then after that is an equal tax rate on every single other dollar of income you earn. The reason I think this would be advantageous to the economy is because it would spur investment, spur risk-taking, and spur job creation and entrepreneurship. When you lower the marginal tax rates, those opportunities to start your own business or even to expand your own business become more and more appealing. And business expansion is how we create jobs and create the industry of the future.
Yeah, so basically then you believe that the trend of decreasing taxes is a good thing the Bush tax cuts did. However, there needs to be more cracking down on loopholes.
Absolutely. I mean, my dream view, not sure it happened given the amount of special interests, is to have absolutely no deductions and no exemptions except for the standard deduction.
Okay, and then Robert, what do you believe should be continued, if anything, from the Bush tax cuts?
Well, I think we finally found our source of disagreement. First and foremost, I think we have to look at this empirically. We have to look at the data, both historically and the stuff from the more recent years. If we look at the Bush tax cuts, they were basically designed to do two things. The first was to eliminate the massive government stimulus that Clinton left, because Bush felt that, if we have a bunch of money laying around, Congress will find something to spend it on. The second thing it was designed to do, as most economic policies are, is to create jobs. It very much succeeded in destroying the Clinton surplus, but what it didn't do was create really any jobs. The Congressional Budget Office just released a survey that basically said there's no correlation between low top marginal tax rates and job growth. What there is correlation between is low top marginal tax rates and high income inequality. So I think if we're to reform the tax code, we need to put back in place the high top marginal tax rates of 90% that we saw during the 1950s, which leads to a top effective tax rate. That is to say, if you're actually making $1 million a year, what you're overall paying in percentage-wise will be between 40 to 60%. So between $460,000 if you're making $1 million a year. And I think if we look at that, if we look at the historical data, it's that level of taxation that really leads to both high economic growth and low income inequality, which is what we should strive for as a nation.
Well, obviously we have found out a place of disagreement. That couldn't last forever, obviously. The interesting thing is the CBO analysis. The people at the CBO, Congressional Budget Office, are professionals, but they only work with the assumptions they're given. So if you give them garbage assumptions, they're going to spit garbage out. The thing is, lowering marginal tax rates has worked every single time it has been tried. 1920s, there's a reason it was called the Roaring 20s. John F. Kennedy, my favorite Democrat, lowered marginal tax rates, had a strong economy. Ronald Reagan, 1980s, strongest peacetime economic growth in history. And even the Bush tax cuts, to a certain extent, did work. Unemployment, when Bush took office, there was already somewhat of a recession because of the burst of the dot-com bubble, and we had the 9/11 attacks, which did not help the economy. And under Bush, the unemployment rate got as low as 4.2%, which, compared to the 7.8% we have now, is basically nirvana.
Okay, well, let's go down your points one by one. First off, you say the CBO is, has to work with the assumptions they're giving on. That's when they're making projections for a proposed bill. Here, they're just looking at the historical data and they're analyzing it. And what they did is they basically looked at the tax rate and they looked at productivity and job growth, and they found no correlation. So effectively, when you analyze the data, it doesn't matter what the tax rate is, it doesn't affect job growth.
Now, if you don't mind me butting in, we're running out of time, so would you like to make your closing statements? Ralph,
Well,
start with you.
first of all, good closing statement I think to make is I'm glad we found some agreement, extend all the Bush tax cuts until we can fundamentally reform the tax system. So that's the first good takeaway I think people should have. And second of all, if you ask me, I think we need to lower marginal tax rates to encourage entrepreneurship and job growth.
Yeah. And then Ralph?
Okay, well, again, I certainly agree that we should extend the Bush tax cuts because that's just basic economic principle. But I think when we look at what the goal of our tax code is and what the goal of our economy, it should be to promote strong growth and income equality so we don't have what we have now, which is where the top few percentage points of our economy walk away with the vast majority of the income. So I think that's where we need to look at the historical data where, again, in the 50s and the 60s, somewhat in the 70s, but we lost it by the end of it, where we had a high marginal tax rate for the top income brackets, 40 to 50% effective tax rate for the top income brackets. That led to strong growth, low income inequality. Everybody was happy. Why not just enact those policies again? Because they worked great, and they stopped working when we got rid of them with Reagan. That's just basic economic history. That's how things worked historically. That's how they should work now.
Yeah, well, it looks like, at least for the short term, you're in agreement, which is something very important voters should know in this upcoming election. So I'm very glad that was very, very informative. Well, in any case, though, that's all the time we have today for Polar Politics. Thank you, Rob Roll and Robert Fernandez, for joining me today. Join us next week when we'll talk about voter ID laws. Campus Connections returns in just 90 seconds.